All right, Alan, welcome back. We're going to tackle a common question that we get all the time in the agency today. What actually impacts your auto insurance pricing? All right, here's the deal. I've got 6 items on here. They're definitely not all factors because auto insurance premiums are super complex now. There's a lot that goes into them, but I've got 6 factors on here that we'll talk about and help hopefully provide a little clarity on what actually goes into auto insurance pricing. Are you ready?
I'm ready. Let's do it.
All right, item 1, your age.
Yeah, so insurance, one of the rating factors is age. And if you've got young drivers on your policy, that's going to impact your rates. They tend to be riskier. They don't have experience driving and tend to do riskier things. So that's always a big factor. And then, you enter into a kind of a sweet spot in your mid-20s, 30s, 40s. And then, unfortunately, we start working on the back end, on the backside of it as you get older. And again, mistakes tend to happen. So we can see sometimes that as people get older on their policies and stuff, that their rates will start to get impacted by that too. So age is one of the rating factors and common variables that we see every day.
Yeah, I remember when we first got into the business, I remember, talking with Dad about it, and he kind of always would make the joke that, insurance companies, the rates kind of get you when you're young and when you get older, know, and that's just a fact of insurance and a fact of life and how things go. When we look at kind of those youthful operators, around what age do we start to see things slow down and taper the other way?
Yeah, so I mean, it really does start right off the bat. So that first year when they don't have experience, that's the worst year. And then when they're 17 and now they got another year of experience, things start to get a little better. 18, even better. And certainly by the time they're 23, they're really stopped being penalized for being a young operator, and they start entering into the better areas, if you will, for insurance coverage, because now they've got experience. And they're kind of entering into that sweet spot that insurance companies like to work with. Yeah,
and there's certainly a whole entire video we could shoot about strategies for youthful operators. But when we think about age, you kind of hit that sweet spot that you referenced in the middle. When do we start to see, the age start to, be a negative factor the other way as we get older?
It really depends. Again, insurance carriers want to be respectful that folks, obviously in retirement have fixed incomes and so forth.
Yeah, and they've probably had this person forever, you know. So it's like, it's hard to, not punish, but it's hard to, make sure we're charging the right rate,
So what I usually end up seeing a lot is the rates themselves might go up a little bit, but then now there starts to be a lot more of a review of the account if there are accidents. So it's not uncommon to see in that scenario where you might see a small fender bender, and then a year later you see something a little bit bigger, and the year later something even bigger than that. And that's what starts to trigger for the insurance carrier that things might be going the wrong direction, is when they start seeing multiple events and they're getting more and more severe. And then that's when we start seeing that rate impact. So when does that usually start? Could be anywhere 65, 75. You start really seeing some of that. And then certainly by the time someone's into their 80s, that's when the insurance companies really are keeping a close eye on what's going on. But if things are progressing normally and there's not any concerns, you can see things stay relatively stable and calm from a cost perspective. It's just when all of a sudden events start to occur that they get nervous.
Yeah, and I know certainly, within our own agency, when we have folks that are coming to us that might be in the 70s, or we have folks within our own agency that are current clients that have kind of reached that age, and they're curious about what other pricing options might be available if they got sticker shock. It's often a little bit of a balancing act of, okay, here are our options, but we've also built out some nice longevity with whatever company we are with currently, and does it make sense? And so it's just one of those things you kind of have to talk through and work through a little bit. So, all right, next item. What actually impacts your auto insurance price? Your claim and driving record.
Yeah, so that is one common area that they will look at the time where you're getting a quote for auto coverage, is going to be, all right, do you have things on your driving record? Speeding violations, accidents, a combination of both. And all those things can result in increased premium, or will most likely result in increased premiums. And sometimes you might not be eligible for a certain company depending on what violations you've had and so forth. They're going to want to see that stuff work off your record before.
Yeah, and anything you get, younger than 3 years is going to definitely get caught. Some companies it's 5. So it's a bit of a balancing act there for sure. But again, a lot of times there are options out there. We might just need to make a plan, right? Sit down and say, okay, so here are these events that we know about. Carrier X is the best company we can put you with right now. We know this, accident or speeding ticket is going to drop off, a year and a half from now, and we can look at some options there to see if maybe we can, find some savings at that time.
Yeah, when we're quoting new business, that's something I try to look at is, okay, so if you've got a violation that's going to fall off in 3 months, it doesn't make sense for me to like rewrite you right now because you're going to lock in that rate with that violation for another year, where you're better off to let's just work through these last 3 months, get that
Yeah.
violation off your record, and now we can go to market without it, and now you don't have to live with that impacting your rates for another year.
Yeah, and one of the next bullets for things that actually impact your auto insurance price is your location, where you live.
Yeah, so certainly broad scope, yes, states you live in, some states are way more expensive to insure in than others. And then even within a state, they do look at, different areas because there's each town has their own statistics for, for crime and so forth. So that can result in rates for your vehicle. And then, for whatever reason in Vermont, we call it the 89 corridor. That tends to have better rates if you're within driving distance or short driving distance of Interstate 89. Not really sure why. It's just statistically a thing. So they call it the 89 corridor. So there are different factors that come into your location impacting your rates.
Yeah, and we talk all the time about how we're fortunate in Vermont. When it comes to auto insurance rates, we, if you look at rates kind of across the entire country, across the nation, I can't remember if we're in the top 5 for least most expensive. We're definitely in the top 10 for least most expensive auto insurance states. So we are somewhat lucky there. One of the other items that definitely impacts pricing is what type of vehicle you drive, or even what vehicle you do drive.
Yeah, so certainly that's something that impacts your rates is, okay, do you have a new vehicle? Does it have a lot of technology on it? Yeah, certainly hybrids and electrical vehicles have more complicated things. It takes longer to get parts. If it's a certain vehicle type, you may have to go to Massachusetts to get it repaired. So all of those type of things end up impacting the premium that you get assessed for that vehicle because it's going to cost more to maintain it or really repair it at the time of loss. And that's what the insurance carrier is worried about. If they got to pay to truck it from Vermont all the way down to Massachusetts, have it sit there for a month waiting for parts while they're giving you a rental car, and then pay to bring it back, all that's going to impact your rates.
Yeah, and you can kind of think of it like, when we're looking at some of those items and vehicle types that definitely can have an impact on your premium, that those safety features that you mentioned, that technology can help prevent accidents, but then the downside of it is it's often expensive to replace and repair. So it's kind of a balancing act. We've got all this nice safety tech now, which is great. It can help prevent maybe some severity of accidents. But if you do get an offender bender or somebody hits you, it's going to be more expensive to repair that vehicle. And then, of course, the old classic adage of sports cars, convertibles, things like that. High performance vehicles are, can be more expensive to insure. But a lot of times that just comes down to the value of the car, especially when you're thinking of, comp and collision coverage. Next up, vehicle usage and mileage driven.
Yeah, so this is a relatively new rating factor we're starting to see. We've always had, kind of categories we would put clients into. So you'd have pleasure use. So maybe you're just driving it, work from home, you're retired, you may only driving a couple days a week, a few miles here and there. They call that pleasure use. And then you had regular work, which would be just driving to and from your place of work every day. So maybe you're putting on 10 miles a day or something like that. And then you could go up to business use and say, yeah, I'm driving this thing for work every day. I'm going to different job sites and those type of things. But now we're actually seeing some carriers go to the point of using some public data sources to figure out how many miles you drive in the course of the year, and they're basing their rating off of that. So you might guess, more miles you drive, the higher risk you are. So we're starting to see that actually become a rating factor. Again, that individualized component we were talking about earlier that's really confusing the personal auto is that they will pull that data so they'll know exactly that I put on 35,000 miles in a year, and they're going to rate me accordingly, where someone that's only doing 1,000 is going to get a better rate.
Yep. Yeah, and that data is pretty readily available now, particularly with our new state inspection processes and all that. There's a large database out there of mileage that gets updated pretty regularly. So, the last item that I have on here on my list, and like I said, certainly this doesn't encompass all the items that impact your insurance premium, but one of them is an insurance score, or basically what is a soft credit check.
Yeah, so and again, one of the many rating factors that insurance carriers have developed over the years is we call it an insurance score, but at the end of the day, there are some other factors, but it's largely a soft touch credit check. So what do we mean by soft touch? You're not going to see it show up on an Equifax report or something like that as something that actually impacts your credit like you would if you were getting a credit card. But they are looking to see roughly, and they've correlated credit scoring with risk. And, depending on different rates, they'll return different ratings, they'll return different rates. So it's a little bit complicated, but again, it just makes it so that you can't compare rates from me to you or someone like that because there's just so many different factors that go into it.
Yeah, and when we first got in the business, it was like, we had a few carriers doing that, and it was like super, super basic, know. And now it's more complex. And if we look at something, there is nothing in there that we can even, usually we don't even see the score.
Right.
But even if we did, it's like, ZN is almost like a football play, like a ZYN 134. Like there's no like I don't know what any of that means,
Right.
So it's something they run behind the scenes as part of their rating.
And I'm not sure they really know what it means either.
Yeah.
But you do bring up an interesting point too, though, with that, and kind of a trick of the trade is if you are one of those people that has your credit reports frozen because you're concerned about a hack that occurred or something like that, we've all gotten those letters in the mail. That will return a neutral or no score, which sometimes can actually negatively impact your insurance rate. So if you do see a jump, again, call us, let's talk through it. I'm sure we'll touch on that in a minute. But the same end of it, that could be a factor. We might need you to go unfreeze your credit so that we can re-rate your policy, and then you can go back and freeze it again. But they may be getting a no score or a neutral, and that's actually hurting you.
All right. Well, we hit on 6 items that impact your auto insurance price, your premium. That's certainly not the full list, but if people have concerns or questions about the premium, what should they do, Alan?
Again, give us a call. That's what we're here for. We work through this stuff every day. We do attempt to decipher the complex insurance score, whatever's going on, and at least communicate to you why we're seeing what we're seeing. People don't always like that answer, but it is what it is, and how we can improve on it and go from there. And that's really the number one thing. Just give us a call. Let's talk through it. Let's figure out, was there a vehicle change? Was there something? Because similarly, there could be discounts that came off that we didn't realize. If you do have a young driver, maybe their good student discount came off and we didn't catch that it did, and we need to get them an updated set of grades. So there's a lot of different factors.
Yeah, for sure. All right. That covers it. Cool.